Hello guys, and welcome back again to another video, another price action strategy video. This is going to be a very strong pure price action or strategy, and it's actually an A+ setup with a very good risk to reward ratio. It occurs once or twice in probably 2 weeks or a month. Yeah, this is actually still for day traders who are seeking to make significant amounts of money in the day and be done with the day. My system is particularly based on visuals, patterns, and price, charts. It doesn't involve any mechanical or mathematical or indicators or anything like that. Yeah, so it's quite very simple, and I'm sure that everybody can relate to it. I'm going to be going into the entry strategy right about now, but I've personally named it as the H and the inverted H pattern. The H pattern like this, which occurs at the support level, yeah, and the inverted H pattern like this, which occurs at the resistance level. Yeah, so let's get into the entry strategy for the H pattern, and then I'll move to the entry strategy for the inverted H pattern. So the entry strategy for the quote-unquote H pattern is here. Number one, it is a short-term reversal pattern. Yeah, it is a short-term reversal pattern in the sense that it can actually occur in a downtrend where there's a support level. And this actually brings me to point number two. It occurs at a support level, or it occurs when a structural level is about to begin. Yeah, so when there's a support level about to begin, even though there is no previous support level anywhere, or you can't find any previous support level anywhere near that structural level where the formation is about to begin, it can actually be the beginning, or it can actually form at the beginning of a structural level. I hope you get me. Number three is that there's first a bullish rejection from the support level, and then a bearish retracement or almost the same support level. I'll be going into it very soon so that you get a clear picture of what I'm talking about. So number four, and the last point, is there is some form of a doji or an inside bar closing that retracement, sometimes form bottom tweezers. So I'm going to go into it now. So as you can see, there is first a bearish downtrend to this support level, or this support zone, whatever you call it. So after that huge bearish run to that support level over here, there is first a bullish rejection, or a mere rejection, and then you can see that there is a retracement to that support level. There is a bearish retracement to that support level, and then after that there is also a bullish close, or a bullish candlestick closing that retracement where I've circled to that support level. And then after, you can see that big candlestick pushing up. After just seeing that there is a close of a bullish candlestick to that level, you can take your trade. So the stop loss will be here. Your take profit will be the next resistance level here. Will be the next resistance level over here. And then you are done for the day. You may see that that's candlestick to be quite small, but it's actually very huge. It's actually 87 pips running. So first there's a bullish rejection and a retracement to almost at the same support level. Bullish retracement from the support level and a retracement to almost at the same support level. And then there is a bullish close. And you can see that it's kind of forming, bottom tweezers with the other bearish candlestick over here. Yeah, so take notice of that. But you can actually see that it's an H before the bullish candlestick closed the bearish retracement. Yeah, so I'm going to show you another on the same USD/JPY, another pattern formation. So here's another one over here. There's first a support zone, and then a rejection. After that bearish run, a rejection from that support zone, and then a bearish retracement to almost at the same support zone, and you can see that there's a candlestick closing that rejection. Once you see that there's a bullish candlestick, this looks like almost like an inside bar or a doji. So once you get to see that there's a bullish close after that retracement to almost at the same support level, you take your trade, you put your stop loss below that bullish retracement, and then you take profit at the next resistance level, and then you are done for the day. I feel like the psychology here is that the rejection from the support zone, the bulls are actually showing their presence, and with the retracement, it's actually building momentum. And so when you see that candlestick, that doji, or that inside bar candlestick closing that retracement, it means that you're about to push way up. So I'm going to show you the very last one for this USD JPY chart, and it's actually here. So as you can see, for this one is actually starting a reversal pattern or a structural level, a support level here. And so, as I said first, you can see that there is a bearish run to this level, and then a bearish retracement to that same or almost at that same level. And once you see that there is a bullish close of an inside bar, which is almost looking like bottom tweezers, with a bearish candlestick, the previous bearish candlestick, you know that there's going to be a move up there. And so you quickly take your trade, take your profit at the next resistance level, and then you're done for the day. So this is the entry strategy for the inverted H pattern. Yeah, quite simple. One, it's mostly okay at a resistance level. And two, there is first a bearish rejection from that resistance level with a doji or inside bar, or there's a candlestick called a spinning top candlestick as a confirmation for entry. Yeah, so I'm going to go into it. I'm going to show you right now. So this is basically how it looks like. First, you can see that there's a bearish rally to resistance level, and then it was stopped by the bear. So there's a bearish rejection from that resistance level. And after that bearish rejection, the next candlestick is a candlestick called the spinning top candlestick. And so as soon as you see that candlestick, you know that it's time for you to enter into that trade. So you can actually enter into the trade when you see that huge bearish reversal candlestick that is engulfing that bullish candlestick around that resistance area. You can actually take your trade right from there and take your profits at the next support area. But I would advise that you just wait for that confirmation candlestick, which is that spinning top candlestick, before you take your trade, because when you take your trade right after that rejection at that support level, you may not have a very good risk to reward ratio, right? You can see it somewhere here, circled it here. So you can actually decide to wait for a perfect risk to reward ratio or exit, reduce your loss size and just take the trade after you see that rejection from that support level. And as you can see, it is actually looking like an edge that is turned backwards. Yeah, so you can see that here. So you can actually see that as well over here. I don't know if you can see it well, but you see that there's H that has been turned or inverted. I don't know, for lack of proper words, I'd say inverted H, right? Yeah. So you can actually see that on the USD/JPY chart as well over here. And you can see where I've circled. There is a resistance area somewhere here. And so you can see that there is an inverted H. This one is giving you a very good risk to reward ratio, right? So you can take it right after you see that H parting, inverted H parting and a rejection. a bearish rejection from that resistance area, you can quickly take your trade, get your profits at the next support area, and then you are done for the day. Now, I have to also chip this in that this is something that you need to practice. As I said earlier in my previous video, there is a lot of noise on the charts, and you need to back test regularly to actually fish out the views, A plus setups, and high probability setups. Okay, so if you want more of these videos, just subscribe and like this video, please. It helps the algorithm so much. I believe that you learned one or two from this video. Yeah, so like this video, subscribe, and then yeah, see you in my next video. Bye.